Hey everyone, hopefully you're having a great day. My name's Andy and my channel is Finding Value. Today I want to go over watching value. And what does that mean? I know it sounds similar to finding value, watching value. When you're investing in these things, don't watch the price. And I know that some of you guys are down in your accounts on some of your positions. Some of them you're massively up. On some of mine, I'm up very, very big amounts, hundreds of thousands of dollars in single positions. If you want to know. And those fluctuate tens of thousands of dollars. I could be down 40 or 50 grand in a single position from a very small original investment. What I do is I don't focus on the swings. I don't focus on the prices going up and down. I don't focus on that stuff. I focus and watch the value. I watch value. Just if I could if I could get this across, the value is what's going to make you money. The price is not. The price will follow value. That is the sequence of order. If you can identify value in the market before everyone else can identify it, and you invest in the contrarian play, the one where no one's at, the herd, the money will come and that money will rotate into the sector that you're in. You are in the undervalued sectors. That money will rotate over. But in the short term, you're going to see these values, these prices go up and down. The values remain the same. The price just goes like this. And when you're a new investor, you're going to look at the price and you're going to say, this investment isn't working. It's going down. Guys, this isn't a day-to-day or month-to-month. This is a year-to-year investment. Year to year. And these markets don't go straight up and they don't go straight down. They don't just go straight up. They go up and then they pull back. And then they go up and then they pull back. And you know what's even worse is that usually the moves up are very strong, powerful, and short-lived. You get these long declining kind of pullbacks, which sometimes people are so impatient that they can't wait. So here, I'm going to show you what I watch. I'm going to show you how patient I am. And patience will get you money. That's how you make money, is through patience. It's not through being impatient and trading in and out. So this one's watching value. So as we go, holding is looking to be more difficult for most people than what most people think. That is a skill. It is a very well sought after skill, patience, that is, in investing. And again, this is a part of the game. You have to be patient for this game. And if you want to make a lot of money, you have to be patient. The volatility is part of this game and we're all in it. We're all in. What I watch is market conditions and valuations. That's where my eyes are at. Those are our leading indicators. That is what we need to watch. The prices will follow that. This is what will drive out our investments higher in the long term. Short term, it's going to be a wild ride, moving up and down and all around. We're going to try to time our purchases, and guess what? We're not going to be perfect. I'm not going to be perfect. No one is going to be perfect. No one on YouTube is going to tell you when the absolute bottom of any of these stocks are. No one. They're not going to know. So we're going to try our best to time this stuff, and we're going to use our market conditions and valuations as our compass of where the market is heading. So here's real estate. That is is one of the great pillars of knowing where the market's going to go. And housing starts, more specifically, sets the pace for inflation. That is my opinion. You watch the housing starts. If they are climbing every 3 to 4 months, you are good. Now, why would I say 3 to 4 months? Because the short-term fluctuations from month to month aren't accurate enough. You have to look at an average. You have to look over the past 3-4 months and look at the trend, not the month-to-month movements. We are in an expansion phase of real estate. That's where we're at today. I propose that is inflationary. That's going to put a downward pressure on the dollar. And dollar weakness is our tailwind to our investments. That is all tying it together. Real estate, inflationary, dollar pressure downward. Downward dollar pressure means a tailwind to commodities and inflation assets. Here is the housing starts. This is what it looks like. This is the Fred housing starts. This is new privately owned housing unit starts. This line is the yearly average. This is the average. and we are heading above that average. When we are above this average moving on up, we are in an expansion phase of real estate, period. That means that money will eventually rotate into inflation assets. That is, the last commodity boom was from here to here, and the other one was from here to here. So we have these things aligning. The ratios, which I'll show you in later slides, and real estate cycle. Here we are in the real estate cycle. We've got recovery, expansion, hypersupply phase, and recession. We tie that into this. We've got recovery, expansion, hypersupply phase up here, and recession. Recovery, expansion, hypersupply phase, recession. Goes over and over and over. This is the cycle. Why did the stock market have such a long move in the markets? Because the recovery of real estate was very long. It was much longer than the ones back here. So the market went to the upside in a recovery phase of real estate for a much longer period than normal. That is why stocks are great in recovery phases. Inflation-protected assets are great in expansionary phases. Bonds are great for a hypersupply recession area over here. That's when interest rates go down. Interest rates go up here. Interest rates are relatively stable in recovery phase. Then they increase in the expansion phase. Then they decline after everything crashes. They're trying to reflate everything. Here's the dollar. You think the dollar looks great? No, it looks like CRAP. Here's the uptrend line. Broke the uptrend line. We're heading lower. Will this cycle up and down? Yes, it will cycle up and down over time. Nothing goes in a straight line. Repeat, nothing goes in a straight line. And if the dollar doesn't go in a straight line, it's going to have impacts on commodities in positive and negative ways over time. So they're going to cycle against each other and move all around, but the general trend is down. Lower dollar. Here's the commodity index, downtrend line. Now, if we have a downtrend line that you can draw down here, it broke that one, but now we're working on the big downtrend line. This is the big boy line. You break this big boy line, you get paid big time. This is where the big moves are about to happen. We're just right there. We're turtle heading out of this thing. We're ready to break. We're ready to use the cheetah legs, get it in the open, and start running to the upside at some point. When that dollar falls, this stuff's going to move quite substantially. When this guy drops, and it will drop, it's going to drop like this back in the last commodity boom. That was the last commodity boom. This was the last expansionary phase of real estate, and we're entering another one right here. It will come. And commodities are going to go higher. They're going to go way higher. The fundamentals back it. The dollar backs it. The real estate expansionary phase, tailwinds behind it. Now here's the commodity to S&P 500 ratio. Anything down here, you can bet some good money on some commodities and walk away from a thousandaire to a millionaire. But guess what? Between now and then, you're going to have to ride through a lot of volatility. You won't make a ton of money unless you can endure and be patient enough for your investments to work. This doesn't happen overnight. It takes years, not months. I'm sorry. If you guys think it's months, it's not going to take months. It's going to take some years. I mean, you're going to make a lot of money in some months, perhaps, but you're also going to have to ride through this volatility. It's the way it is. Here's the USD to Swiss franc ratio, last commodity bull market from late 1990s, declining dollar against the Swiss franc. Between the blow-off, we'll call it the hyper bubble in real estate, had to work its way through, and this is the recovery phase here. That's when the Swiss franc was gaining against the dollar, but guess what? Or the dollar was gaining against the Swiss franc here. Now the dollar is losing steam. Swiss franc is outperforming, and it's going to head on down. We are in a downtrend now. Commodity bull market, game on. Here's platinum to gold ratio. We broke the downtrend. This is a big downtrend line. Broke it to the upside. It's doing a flag pattern. Probably going to continue to the upside for the platinum to gold ratio. What does this ratio signify? When platinum's outperforming gold, guess what? Commodity bull market, game on. Guess what else? When copper outperforms gold. Gold to copper ratio. Means when it breaks down to the downside, copper is outperforming gold. We broke the uptrend line and it's going to decline, signaling this was the last commodity bull market and how low it got. We are going to decline, signaling what? A commodity boom. That's what we're signaling. Commodity boom. Commodity boom. Commodity boom. Commodity boom. Commodity boom. Commodity boom. Blah, 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 blah. Everything is signaling a commodity boom. Everything. Here's the Huey Gold Bug Index. Look at this thing. Broken down trend line. Low. Higher low. Here's a higher high. Broke out. Back tested. We back tested a little bit further back. This thing's going to be gone. You guys sleep on this? If you don't get in this, it's going to be gone. This is showing that a big move's coming. A very big move. Maybe a doubling or tripling of the Huey index or more. What about the Huey to gold ratio? Look at this thing. It's right in the pattern. Right here, we're coiling up. We're coiling on up. It's coming. We haven't even started this big move where the Huey's going to outperform gold. It's just coming. Gold's just moving right now. Where do you think I've got my money? Put my money where my mouth is. I'm saying commodity boom. I'm in it. Precious metals, I'm in it. I'm in it to win it. This is it. I'm ready for retirement, guys. Here's a trend line here. Higher lows coming up, coming right into the trend line. What do you think is going to happen? We've got higher lows going right into the trend line with all of its strength, momentum, and power. I'm going to break it. We're right there. We're turtle heading out of this thing. We're going to break through this. We're going to come up here. We're going to 4 or 5x this thing. That means gold and silver is going to go 4 or 5 times more than the price of gold. This XAU. It's going to be a thing. So what I see is everything's game on. Every single metric I look at, game on for commodities. Don't be afraid of the short-term movements. You guys got to look at the long term. Look at the trends. Look at the big long-term trend, and it's just starting. Even the companies are newly created uptrends. All the ones that I'm charting, uranium companies, gold companies, oil companies, they're all in uptrends. Be brave when no one is at the party. When no one's there, you can do whatever dances you want. You can drink as much as you want. It doesn't matter. It doesn't matter to me. Do whatever you want. Partying alone is okay for the first beginning of this party. We got here first. The herd will come. They will come, and they're going to come with all their money. They're going to be chasing. They're going to be the retail sectors who come in here and chase. That's what they do. They're going to go chase Bitcoin right now. Think I'd be buying Bitcoin? Heck no. That's way up there. That's a bubble. That's just me. I don't chase things. It's not my gene. When things pull back, I try my best, try to buy whatever I can, and then I just hold on. Cost average in, get your shares, hold on. Are you going to look back and be like, you know what? I was just not smart for buying this company. I got it for $4. I could have got it for $3.75 when it goes to $20 or $30 at the end of this bull market. I mean, you're not going to be hurting. You're not going to be looking at yourself like you were not that smart for buying and missing a bottom by 25 cents. What you're going to be saying is, I wish I bought more. I wish I cost averaged in. I wish I got my shares, just kept going in when things are cheap. And that's what I'm doing. I'm buying stuff when it's cheap. I'm holding on. The charts are coming. The freight train is coming. The momentum is going to come, and you're going to see these things move. You don't want to get in after the move. You want to get in before the move. So no YouTube channel, me, no one else, they're not going to get it perfect. What you do is you just buy and you hold on. You hold on, you wait for these things to rotate, and then it comes, and retirement's here. I mean, that's the way I'm going to view it. So hopefully this is helping you. Hopefully this presentation has given you a little bit more insight on value, direction, on trends, on all those things. I've presented this a couple times before, maybe not in the same charts, in the same format, not real time, but it's all coming. So be patient, find the companies you like, do the research now, get invested in whatever you want to invest in, and hold on. Be brave and hold on. You will be paid. It just takes time. If you guys like this content, give me a thumbs up. Leave comments below on what you guys think. And thank you for listening. This is Finding Value.